All right, team, I should be up on YouTube. If someone can confirm and post the link, then we can get started. Just waiting on somebody to confirm the YouTube. Thanks, guys. Thanks, guys. All right, I'm an associate member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is the same. There's me. And whoops, I need to bring that one up. Charts. That's what I'm looking for. Charts. All right. Oh my God, guys, what this market is just it's insane, completely insane. Tesla's getting hit here after hours, down $40 or so here after hours on beating on all their numbers. I don't remember like ever rooting for Tesla to go up after hours like this ever before. And I really am rooting for it just to help the whole market. And it looks like they beat on all their numbers, but it doesn't matter. I mean, this company, if you're hitting growth stocks right now, if you're hitting valuation stocks right now, stocks with those lofty valuations right now, then it's incredible actually that Tesla's held up as well as it has throughout all of this. Along with the other electric car companies, it really has seemed like, and I got SoFi up here, I should bring Tesla up. It really, for whatever reason, has seemed like, even though these last however many months, the market has wrecked all things growth, electric cars have been relatively unscathed through all of it. I'd be curious to know how Stefan would answer your question there, Gabriel, on what would be a reasonable price for Tesla. Probably half what it's trading at right now. I wish I remembered the numbers of that podcast I was listening to on my drive to Wyoming the weekend before last. It was just really interesting. They spoke about in that podcast that some study or whatever that did. It was basically a study of company valuations based on cars produced, and it broke that down to how much money, like what the valuation of each car is. And I really don't remember the numbers, but it was something like, Toyota, like a couple $1,000, and then Tesla was like $1 million or something like that, and then like Lucid was like $55 million a car, something crazy like that. Obviously, it's all based on those potential growth factors or lack thereof. Well, look at Tesla's trying to snap back here a little bit right now as we're chatting. So we'll see. Oh man, guys. Let's get into the actual real portion of our meeting here. So S&P closed down 0.5%. Doesn't seem like too much. Qs right now are down about 0.5%. IWM is down 1.5%, 1.6%. So the Russell took a little bit of a beating. But what you can't tell in the indices, in their percentages. So first of all, this is the worst closing price that we've had so far out of any of these days. And what you can't tell just looking at the percentage of the indices is that it was actually a huge down move intraday today. Jerome Powell sunk the markets. We were having our best day in a while. Markets were trading really well. We had a gap up above the inside day basically for the SPYs and the Qs. Indices were looking like they finally wanted to give the price correction that we had been talking about for the last couple of days because markets were extended to the downside. So we're looking for this price correction to get back to at least the lower band of equilibrium, which is the ADMA. And guess what? That exactly happened. And it was started with this gap. Price action here was a little bit sloppy. Initially on the Fed, we printed higher. I actually want to pull up the Qs because the NASDAQ was trading really well today. I know we broke intraday lows a little bit at 10:45. and then we kind of grinded higher into the Fed meeting, snapped up really hard at 2 o'clock when the Fed announcement actually came out. That's when we basically touched the ADMA on the daily chart. IWM doing the same thing, touching the ADMA on the daily chart. And big shout out to Diego, because I was actually being kind of greedy when the market was making highs here on the Fed meeting. Because my thought process, which turned out to be wrong, was more wrong because of what Powell said in the press conference than what the actual Fed announcement was. I was probably more right on the Fed announcement, and then Powell spoke, and then just absolutely destroyed the market. My thought process, so at 2 o'clock today, expectations were met perfectly, right? The real expectation that the Fed has provided to us is that there's no interest rate hike today. The first interest rate hike is going to be in March. That's going to happen once the tapering is completed, which is also going to be in March. And guess what? The Fed came out, and everything that they said was perfectly in line with everything that they've said previously. And my thought process was that the market has kind of built in extra fears and extra uncertainty just because of the obvious, right? Because of there was a little bit of a surprise on the balance sheet comment that they made on the last Fed minutes, and people are getting nervous on your inflation numbers and everything else. So I actually thought that the Fed was going to come in and they were going to say exactly what they said today, which was nothing new at all, and that the markets might stage a bit of a rally on it. And we were actually up into the Fed meeting, which maybe made the continuation of a little, post 2 p.m. rally difficult. But even with that, the initial reaction here was higher. Then this little 5-minute shooting star came in, and again, like I was saying, at first I wanted to be greedy throughout that 5-minute shooting star, and then Diego here in the VTF was like, hey, these markets are touching the ADMA on the daily chart, and then I was like, you know what? You're right, Diego, you're right. Great call out. So then I kind of flipped my switch really quick here, and when this candle closed, I was telling everybody in the VTF, you know what? Let's not be too greedy. Let's take something off on the longs into this initial pop higher, and or look to be able to hedge yourself if you've got a lot of longs on. And then the market broke down. We always want to pay attention to the low of the initial move, which here was again just looking at the Qs, 352.98. So basically 353. Even just about. So if that low breaks, then you know that everybody who bought in this first candle is out of the money, so you're going to get a reverberation down low, and that's what happened. And then we broke back up, and it was looking like this market wanted to do a whole lot of nothing, to be honest. A lot of the times, and my thought process was, again, I thought that if the Fed met expectations, we would actually trade higher. But a lot of times when the Fed just meet expectations, what ends up happening is you get a lot of volatility and the market basically ends up where it started. And that's what was looking like it was going to happen to me at this point when we were at 2:25 p.m. here. So 2:25 p.m. the Jerome Powell begins speaking at 2:30, so he's not yet talking. Market's kind of just bouncing back and forth off the 2 o'clock announcement that perfectly met expectations. The conference starts. Same thing here, market's bouncing back and forth a little bit, and then he started just hitting us with some really bearish comments, some really not good comments here. He was saying some bad stuff. He was saying, leaving open the possibility to raise interest rates at every single Fed meeting going forward, leaving open the possibility to do, and this one I was really surprised about. I know Josh in the VTF has been really hawkish recently, and I've been kind of less so. I definitely didn't think that there was going to be an increase today, and I definitely didn't think that there would be any way that the Fed would consider doing 50 basis points on an individual rate hike. But he left that open. He left that open, but it was really 100% Diego. It was really that comment of, we're leaving open the possibility to do a hike at every single meeting that was just so hawkish that, markets just got destroyed. Jerome just absolutely wrecked the markets. We're set to have a really nice green positive day today, and then the comments that he made, just this sell-off here. I mean, we've been having huge ranges to begin with, and honestly, even these candles back and forth before that comment came out were so huge. Look at this. These 5-minute candles are like $4 to the downside, $5 to the upside, and then he comes out with that comment, and in 10 minutes here, NASDAQ, the triple Qs traded from 354 to 346. $8 move in 10 minutes, followed by a bear flag here that we called out. 2 inside bars in a row, bear flag, breaks down further off that inside bar. There's your next leg lower. You know, the next leg lower here is a move from 348 and change to 341. Let's just go another $6 down move. This is perfect technicals, by the way. $6 down move, bear flag, $6 down move. I mean, that's actually literally perfect technicals. And then we started to build out this bearish consolidation again. Qs were actually holding up best. IWM was leading us lower. IWM wasn't even creating a bearish consolidation. It was just going straight down. And I actually, to my credit, had a really good call out at lows today. I got into the VTF. I was like, guys, I'd buy the IWM right here if I could. And it was literally as the IWM was trading back through 194 after putting in this 193.72 low. If anybody took that, you literally could have jumped in on this for 30 cents risk. And I was really happy to see that a lot of you guys in the VTF did jump in on that long. And a bunch of people were telling me that they kind of made their day, actually, in this little uptick move off that call out that I had, which I called a little uptick move. It's, it's $4 here in the IWM. It's $5 here in the Qs. And then we started to build out this wedge a little bit, which also would technically be bearish. You can see this 21 EMA starting to weigh on that wedge a little bit, which would mean that the 15-minute 8 EMA is starting to create a bear flag. So you're starting to get a 15-minute bear flag here. And then we just kind of ran out of time. We ran out of time. There was a little bit of a battle going on here between bulls and bears, with bears being in control, but bulls trying to stage a fight. The bulls really needed to get the market initially back above this 346, and then you need to negate these sets of negative Maribozus, the first of which has a high of 347.70 here for the NASDAQ, and we ran out of time. So bears were in control as of the close, and that's pretty much all she wrote. Part of what helped the market this morning was Microsoft. Microsoft was insane, first dropping a ton after hours yesterday, and then ripping higher when Satya Nadella was speaking in the conference call, which is exactly what we were saying with Microsoft, that it was all about the conference call, and the conference call really not only saved Microsoft, but it saved the entire market. And then today, our big earnings report is Tesla, and what's our Tesla doing now? Again, the Tesla numbers looked okay to me, but it's like I said, it's these growth stocks are guilty, it's just trading at these crazy valuations. It's like the market impulse here is going to be sell first, ask questions later. So not down too much right now, Tesla. It looks like it's down, I don't know, $25-30 from where it closed, something like that. So we'll see if this can kind of hold this 900 a little bit, and the market's okay. And then we got Apple. Apple's going to be the really big one. Apple's going to be the really big one. We got Apple after hours tomorrow. That can have a huge potential impact overall in this market too, just because of how heavily weighted it is. And the market's looking for something to save it. Just like how Microsoft came in. Microsoft came in and said, I'm going to save the day today. And then Jerome Powell was like, screw you, bro. Microsoft was holding in just fine, honestly, for most of the day. And then, post 2 o'clock, I really wanted to see this Microsoft continue to hold $300 all day today. And then it was right when Powell sunk the market that Microsoft lost its $300. So that's it. I almost think that going over individual stocks doesn't even matter right now. It was really just an insane trading session. There were so many things that you could have traded. There was a lot of decent looking long setups actually for the open today. Excuse me, because we had a lot of setups where we had the hammer capitulation candle from 2 days ago, followed by an inside day yesterday, and markets were trading above and gapping above the inside day this morning. So there were some potential long setups. The difficulty, honestly, on the long setups this morning was that the market was actually gapping up too much. So you had to kind of be a little bit patient to deal with short-term overextension to the upside on those smaller time frame opportunities there. And that's it. I don't really have anything to go over. I was very heavily focused on trading the stocks that I'm already in. I traded a lot of Apple today, you know, SoFi today. SoFi was looking good. Now SoFi might get, Lending Club is getting smoked after hours right now, right? That might not be good for SoFi. Though I think that their businesses are kind of different, but it's all in that, you know, fintech type space of upstart, Lending Club, SoFi. So we'll see. I mean, guys, honestly, to the team's credit here, you know, maybe we were wrong on a couple of things. Maybe I was wrong on a couple of things today. But got Felipe and Josh calling out how they're shorting at the high today perfectly. And then I'm talking about the buy at the bottom that those guys then flip their positions to get long on. The communication in the virtual trading floor today was so excellent. I mean, we literally as a team called the absolute high and absolute low of this market, like almost to the penny intraday. And you're looking at a range here post-Fed. I got the SPYs up still. You're looking at a range here post-Fed that was 444 to 429. Just massive $16 range here over the course of an hour of trading or so, hour and a half of trading. And to be able to perfectly nail those highs and lows like that as a team, it's just it just really goes to show you how great of a team we have here and how great of a group that we have, and it's awesome. So I hope you guys are all learning and participating when, you know, some of the better traders here on the team are communicating their executions, because it's not easy for us also to communicate our executions. It's easy to say after the fact, oh hey, guess what, I just covered Apple and I was short and I made $500 or whatever. It's much more difficult to say, guys, I'm shorting SPYs here, guys, buy a market here, and do that ahead of time before the result is there, and then have those executions work out so perfectly. So that's a great job, but and it's a great job because this market is so hard. So the fact that we're able to do that in a market that's as difficult as it is right now, this market is one of the most difficult markets I can remember. It's like I said the other day, like we want high volatility because, I mean, we want volatility because volatility creates opportunity, it pays us. But this degree of volatility is it's too much. It's insane. It's very difficult. It's very stressful. I was so stressed since 2 o'clock today. Still am, and will be until tomorrow. A lot of times after a Fed day is a trend day. A lot of times the market will trend on the day after a Fed day, and that could really go in either direction, like Pat was saying when he was on the radio. I could really see us coming in and trending in either direction at this point tomorrow. Though with that said, bears are in control. So if you just want to talk about pure technicals, bears are in control. So there is a possibility that could work out. So that's it. Cool. That's all I got. Happy to take a look at questions. Scrolling up into the VTF. It's like 10 after 4. There's a lot of earnings information in here. ServiceNow reported, Lending Club reported, Tesla. So the first question I'm seeing here is from Chinggis. He's asking about the way I trade. When do you add back some of the stock that you sold earlier for a higher price? Do you add only the portion of the second half and the half after you cover your risk? Yeah, for sure, Chinggis, on that. So the thing that I'm doing, and I think I have even a little YouTube video, I think it's up, about the difference between adding and adding back. Adding back, when I say I'm adding back stock, it means I'm not putting additional risk on. It means I'm taking back risk that I already had that I took off the table, and I'm taking it back at a better price for cash flow purposes. So, let's keep the numbers simple here. I bought a 2,000 share position, and I sell 1,000 shares to cover my risk. So I have a 1,000 share core position, and I'm looking to work it a little bit for cash flow, and I also want to trail it. To kind of maximize my reward here. What I might do with that 1,000 shares is let's say the market, sometimes I do it systematically, just purely based on price, and sometimes I might do it technically. So on the technical side of it, maybe market gets, for that stock, then gets really extended as a big upside move, gives a shooting star. Then maybe I can sell 100 shares of that 1,000 shares, and then I can look to rebuy that 100 shares as it's approaching its equilibrium area and it's coming back down, and I can keep the difference. So it's what I call cash flow trading. It's a lot of what I do. I like to cash flow day trade around core swing positions that I'm in to put cash and money in my pocket over time. So sometimes I do it systematically just based on price. If I've got a really big core position, I've got 15,000 shares of a stock, then maybe I'm just selling some every 25 cents up and rebuying that 25 cents down, kind of in front of the stop loss or whatever, just to continue to make that money, to make that cash flow. Or sometimes I do it technically as I just described. But it's not an ad. An ad implies that you're taking on additional risk. What I never am going to allow myself to do is, if my risk is fully covered on a position and my worst case scenario is that I might lose nothing, might be at zero, I'm never going to turn that into a loser by adding on additional risk. And if I do take a real ad, I'm treating it as a totally separate trade. It's a totally separate trade with totally separate risk. It might as well be a different symbol. So that's what I'm doing there, Chinggis. I hope that helps. Michael, just reading your comments in Tesla, I totally agree with you. I'm going to move on. Yeah, Powell, in addition to the rate hike comments, then also was making some negative inflation comments about how it, maybe it'll get much worse. Maybe it can stay much worse. He really is, trying to hold down inflation. And he understands the power of his words. He knows very well that he sunk the market today, and he doesn't care. Because the market's not Jerome Powell's mandate. Employment and interest rates are. And his words, in and of themselves, have the potential to be powerful enough to keep inflation at bay. And honestly, hurting the stock market also helps keep inflation at bay. Some people, if they took a big hit this last handful of weeks, maybe they're holding back on that new car purchase that they were going to try to make or whatever it is. And that can enable the supply chains to catch up a little bit easier, because it hasn't just been a supply chain issue. It has been, but it's been supply chain problems combined with record demand for goods. So if you can get people to feel like they have less money because you have a lower wealth effect because the stock market is down, they may be less inclined to go and buy. That actually, that's what you got to do to lower inflation, is actually slow down the economy. And I don't think he technically wants to slow down the economy. I think he would love a robust economy along with bringing inflation down. But if he has to choose one or the other, it's his mandate. His mandate is not strong economy. His mandate is great, high, strong labor market, which tends to go hand in hand with a strong economy, and low inflation. But we're in an environment right now where there's restaurants all over the place that can't even be open because they can't get anybody to work in them. But if the stock market keeps going down, Derrick the dishwasher might have to come out and go get a job at one of the local restaurants. Anyway, that was an inside joke for people on the virtual trading floor from the other day. Cool. Scrolling here through the VTF. From Diego here. Test of yesterday's low and holding for now. Huge next few days. Huge next few days. Huge next few days technically here for the market. SPYs managed to hold yesterday's low. Qs ticked below it. Closed just above it. Sorry, that's the IWM. And Q, same thing. Qs ticked below it and closed just above it. It's a really important area here for the market. Like I said, technically, as we hold down here, we start to create a bear flag. We had the hammer, we had the inside day. This should lead to a price correction higher. We understand how sometimes that price correction could potentially lead to a reversal, but we don't want to predict it. This is what we spoke about kind of the other day, I think in one of our afternoon meetings. We got that. We got the perfect price correction, no market reversal, and then we came right back down. So this coming right back down, the more time we spend down here, these moving averages catch up. This becomes a bearish pattern. So we'll see. Tomorrow is tomorrow is Thursday, right? Yeah, tomorrow and Friday are going to be really important days for this market. Tomorrow is the day after a Fed day, which sometimes leads to a trending day. If that trending day is to the downside with the ranges that we've been having recently, we might be right back at 420 in the SPYs tomorrow. Another $12 lower here in the SPYs. But by the end of the day tomorrow, could easily happen. If we get a trend day to the upside, we could still snap back to 450 in the market and still be bearish. We can still snap back to 450 in the market and still be bearish. Which can happen, which is going to happen, I don't know. We're going to have to assess that tomorrow. We'll assess how we gap. If I had to guess, we're going to gap down, but it's just a pure guess at this point, and it's just going based on the fact that Intel and Tesla are lower on earnings right now, and bears were technically in control as of the close today, but that's a pure guess. And then Apple earnings Thursday after the close. Traditionally, just so you guys know, I'm not planning on doing this tomorrow, but traditionally I canceled the afternoon meeting on Apple earnings day. So 4 days of the year when Apple reports earnings, I actually typically cancel the afternoon meeting because it's very typical that I trade Apple after hours on the report. Apple typically reports at 4:30. So I haven't fully decided on that yet. I'm actually leaning towards doing a typical afternoon meeting because we got all this cool Derrick the Trader stuff that we're doing now. Maybe I'll do an abbreviated 20-minute one without questions so that we can do an abbreviated afternoon meeting and assess the day, and then I can go off the afternoon meeting to trade Apple earnings. I'll decide all that tomorrow. But yeah, big 2 days. Big 2 days coming up here for the markets. Next I'm seeing is from Jackie. I haven't been having good trading days for about a week now, and I feel like I'm letting my past performance affect my future trades, which isn't helping me to get around this spell of bad trading days. What would you say the best way to get around this is? Yeah, Jackie, this is really important, so I'm glad that you're bringing this question up. I'm glad that you're being, upfront and honest with us, that you've been struggling a little bit recently. That's great that you're doing that because it enables us to be able to help you. The first thing I would reiterate is kind of what I said, I think 2 afternoon meetings ago. This is not a good market if you're a new trader. I'm sorry about your bad timing if you're a newer trader with the team, but this is just, there's 2020, 2021, for the most part, first half of 2021 were fantastic, easy times to get started in this business and be a new trader. This market environment, really for the last 6 months, and especially recently, is just not a good market environment if you're a new trader and you're trying to get started. I'm sorry. The ranges are too big. They're too violent. It's so fast. You got to be so fast. So if you're already struggling a little bit and you're already kind of in your head on that a little bit, it's going to make you hesitate even more to kind of do stuff. And then with the market being as fast as it is, if you hesitate, it means that you're not going to be there for good opportunities, and you'll be there for trades that are going to fail. So it just makes it not a good environment for if you're a newer trader. Risk management is so important, guys. Risk management is really key right now to everything. You know, whatever your max loss is, it can be so easy right now to lose significantly more than that amount, and you cannot allow yourself to do that. You just can't. You got to have your stop losses in. You got to know how much you're risking, and you cannot allow yourself to lose more than your personal amount, because it's very easy to do that right now. And if you do that, you're setting yourself up for failure. Now, to more directly answer your question, you're in a bad psychological spot right now. So first thing I'm going to recommend is for you to rewatch my market psychology class that I think you have access to. It's difficult and extremely important for us as traders to come in every day even keeled. Every trading session is a new trading session. You cannot let previous trading sessions, previous successful or failed trades affect the next trades that you're taking and the next day of trades that you're taking. You got to be like a machine. You got to be like a robot. You got to be unemotional about it. You have to know what your edge is and execute your edge regardless of anything else. And if you don't have an edge yet because you're that new of a trader, well, that's why risk management is so important, and you just got to keep kind of working towards it by learning through the virtual trading forum, our daily meetings, and the training programs that we have. So that's pretty much that. I mean, you just got to come in even keeled. You know, watch the psychology class. You know, do your journals. Do certain psychological exercises that I recommend, like meditation and visualization exercises. It's all spelled out for you there in that psychology class. But you can't let the previous trades affect the next trades, because you're setting yourself up for failure. You have to kind of believe in your process and just come in and do it. And it's on both sides of that, by the way, too. If you're trading really well, this is definitely a mistake I've made in the past, and it's hurt me. I'm trading really well, and I just get too loose with things. I just start taking trades that are more random, and I don't have the same level of an edge behind it just because everything else is working out so well. And then what ends up happening is you bleed out. You kind of throw good money after bad a little bit because you've been doing well. And then if things get difficult again like they have been now, you look back and you're like, oh man, I really wish I hadn't wasted that $50,000 on that BS trade that I never should have been in 3 months ago when everything else was going really well. So it's one of the hardest parts about trading. You know, this business, once you get through the learning curve, which takes 9 months to a year, this business really becomes 75% psychological. And it's all about the stuff that you're talking about in your question and the stuff that I'm talking about in my answer. So I hope that helps, Jackie. One day at a time. From Shane, right after the Fed announcement, you mentioned a few scalps you did in Apple. Looks like you were active at the 210 bar. Apple has these bad tails in it. Where was I was doing that? I was buying, I think, 162s and selling 163s, and I think I did it 3 times, and then it just totally broke down and failed. Yeah, I was literally buying 162.01 and selling 162.99 on the bid and on the offer, and I didn't. So it was small size, Shane. It was small size. It's part of what I was talking about earlier also when I was answering Chinggis's question. I got a little bit of a core position right now in Apple, and I'm kind of trading around it a little bit when volatility comes in to make myself some extra cash flow. Just it was partially related to that. And I had one other comment that I was going to make, and I forget what it was. Oh, and I still had this bullish inclination on the market. I kind of really thought here prior to Powell making those comments that sunk the market, I really thought that we were going to end up worst case scenario where we started, based on what the Fed said. So it's like, all right, we ripped higher, we came back lower, they shook some people out, but let me take advantage of this volatility. Let me try to capture a snapback that I think is going to happen, and then he said the wrong things, and then it was just done. It was just done. Gabriel was saying, I love when a lot of the more experienced traders communicate they are doing the same trade. It is like a confidence boost. I love that too, Gabriel. I love when I'm able to see that, Felipe and Pat, and we all have the same mindset. We're all looking at and seeing the same thing right now. For Mr. Steve NYC, can you talk about your position list a little bit? What is your strategy holding core and INSG positions long term? I'm in INSG. I'll tell you where I bought my INSG position. Right here. Full 180-degree turnaround on a core position in INSG. I bought INSG at $4 at the bottom of the coronavirus crisis there in March 2020. I have been in a position in INSG, I'm pretty sure the entire time. I may at one point have liquidated it at highs here and then kind of got right back into that core position just for the same stuff that I'm talking about. I've been in this thing the entire time. It's definitely frustrating to have a stock from $4 to $20 and then hold it from $20 to $4, but that's what I'll do sometimes. Sometimes I'm willing to give stock all the way back to my original stop loss on a smaller core position, and that's what this is, just to see what it can do and let it play out and keep the position on so they can continue to monitor it and trade around it at certain points. To be fair, I have not traded this INSG around that core position very well. I've got a bunch of other core positions that I'm in, like Bed Bath & Beyond and SoFi, that I have done extremely well trading around core positions in those names. INSG I have not, but I do still have that core position. And I gave it all the way back to where I bought it from. Coursera is another one where, oh man, this thing is just disgusting. Just absolutely disgusting. I traded this thing so well at a certain point. I made so much money in it that I kind of felt I could always keep a small core position in this thing, like literally to zero if I wanted to, because of how well I did it in it. I caught the IPO move perfectly. And then I got out of almost all of it, had like a tiny core position, loaded up almost at lows here, caught this move, did the exact same thing into this move here. I traded this thing so well on those moves off the IPO, and I made so much money in it that I'll kind of get a mentality of a certain point, and Bed Bath & Beyond is definitely this way too, where like I've just done so well with this name that I almost feel like I could keep a very small core position. I almost feel like I own this company, like it's my company, some of these names, because of how well I've traded them in the past. This Bed Bath & Beyond and SoFi being probably first and foremost on that list, where I mean I can just kind of continue to hold this because of how well that I've traded it, but I size in and size out, And when things are not going well, then I sized down. I've sized down in Coursera. I've had to. I've traded it really well in the past, and I want to maintain a little bit of a core position in this thing. But I mean, look at the technicals on this thing, along with the other growth stocks over the course of the last 3 months. You can't be fully loaded in this and expect your account to not be blowing up. So, I mean, that's basically it. I like to have core positions in companies that I've done really well in because I can continue to trade around that core position. I feel like I know the names really well, and I'll continue to do that even if certain days are frustrating. And at a certain point, I might have to liquidate it. I'm almost at the point where I might, I bought INSG at $4. It's back to $4. If INSG really loses this 4, then I probably will fully liquidate the entire position. Even though I held it for the entirety of this wild ride, because finally it's getting to the point where I got in from. So it just kind of is what it is. It sucks really, but it is what it is. Gave back a lot in this one. Others I've done extremely well with, though. Bed Bath & Beyond, SoFi, some of the other core positions I'm holding. So I hope that helps you there, Mr. Steve, to understand a little bit of what I'm doing, and it kind of also corresponds with Shane and Chingiz's question on kind of how I trade. From Mike S. I'm looking at the slope of the SPY simple moving averages going forward. I feel like longs are losing time frame continuity. They already did. I filmed a video on this yesterday. I don't know if my man Dylan, who does my editing on stuff, has been able to get it posted on the Derrick the Trader YouTube yet, because I know he's been pretty busy with something that Scott Ruther's been doing this week. But I literally just did a video, like a 20-minute video on time frame continuity in regards to the market yesterday. And you are 100% correct. The time frame continuity to this market right now is almost entirely to the downside. The only thing that's still on the bull side is the biggest time frame. The 200 SMA is still pointing up. Your 20 SMA is pointing down. Your 50 SMA is pointing down. Your 5, 15-minute hourly, for the most part, has been trending down. The daily charts here are trending down on small and intermediate time frames. You got time frame continuity to the downside. Almost entirely, with the exception of, again, the one really big picture for the S&P. And I also would want to see, though, if that applies to all three indices. Qs here are getting very flat. So Qs are potentially starting to lose that 200. And guess what? The IWM did. The IWM flattened and is now starting to very slightly point down on its 200-day. The IWM has full-on time frame continuity to the downside. Guys, this is a bear market. It's a bear market for the IWM, right? We're down 20% now at this point, right? I think, on a closing basis. I know we ticked below it 2 trading sessions ago. Then we had that insane rally. So for not, we're right at it. Guys, it's a bear market. What do you want me to say? The market's having a massive correction as a result of the Fed and interest rates and inflation, and it has brought this market into a bear market. Growth stocks are getting destroyed. Value stocks are holding up. It's just it's a new environment. It's a new normal here, and we'll see what this turns into. It's hard to be bullish on this market right now. It's hard to be bullish on this market right now, especially after today. And like Diego said earlier, these next 2 trading sessions are going to be extremely important to see how we're able to trade. If the market can't save itself over the course of the next couple trading sessions, then things are just going to be more and more and more bearish. Things are just going to be more and more and more bearish. If we don't get a trend day to the upside tomorrow, and if Apple doesn't save us, the more we hang out down here, the more it looks like we're going down. So totally agree with you, Mike. Strategically being on the short side for when the market is not extended to the downside is probably the way to be right now, even as I'm not that way. Scrolling through here, from Damien at 255 today, Q's and Apple. 255, right in here. Yep, we called that out. They form a bear flag, print 2 inside 5s in a row. I mentioned that the internals in Apple were looking better. I did. Can you elaborate on the internals that made Apple better in the aforementioned situation? So again, obviously, it's a bear flag, and it all went down, right? It is a bear flag. That's what we expected. And the IWM was looking worse, the worst to me, and the Qs were looking a little bit better, and Apple was looking a little bit better. And what I meant by the internals is that, in Apple, we got a couple false prints here that are giving me a couple bad tails, so it makes it a little bit trickier to analyze. But basically, I'm looking at this bear flag, right? So I'm not only paying attention to the fact that it's a bear flag, I'm also paying attention to candlestick analysis itself. I know that this is a bearish pattern. I know that there is a significantly higher probability that this breaks down than breaks up. But I also know that it's not a 100% probability of breaking down, that there is a probability of it breaking up. What that exact probability is, I can't tell you as far as percentages go, but let's assume that this pattern gives you a 60-40 chance of breaking down, okay? 60-40 chance of breaking down. Maybe that's even higher than that because of time frame continuity, going back to Mike's question from earlier. But let's just keep it simple, 60-40 down. So 60-40 down still means that there's a 40% chance of up. And this is where I'm trying to analyze everything for other information. I know that the IWM is relatively weak right now. I know that the Qs are acting relatively strong. And I'm looking at the internals. When I say internals, I mean the candlesticks themselves for more information. And Apple in particular yeah, it's these two inside fives in a row. The market's building out this bear flag. A little bit tougher to see in Apple because of these two fake tails. But look at the internals of this candle here in Apple. Yeah, it's low volume, so maybe it doesn't matter that much. But it's an inside hammer that closed well. So there was a chance here that this candle, because as it closes, you've got bulls in control of this period, actually moves higher. And if this moves higher, to go back to the Qs kind of had a little bit as well. If this candle can actually move higher here afterwards, maybe you actually break the bear pennant to the upside. If you break the bear pennant to the upside, from a failed pattern comes a fast move. So again, I know that most likely this is going to break down, and that's what I was communicating to you guys. Guys were bear flagging. And then I was like, but with that said, IWM is looking worse, and the internals of Apple don't look that bad because of this candle. So if you think that there's a chance here that this market could hold in, what do you want to be long? Do you want to be long IWM? No. You want to be long Apple because of the internals of the candle. Or you don't want to be long anything because it's a bear flag, and bear flags are bearish patterns that should break down, right? It's just an additional piece of information that's worth noting, so that's why I communicated it. So I hope that helps you there. Damien, from Sebastian. Hey Derrick, do you consider the inside candle breakdown at 10:05 at the indices as a tradable pattern? 10:05. Yeah, I guess not really. I don't think I would have taken this to the short side, though you could have as a small time frame trade, because it's after 10 o'clock, and we know that the 15 minutes is going to become more important, so it makes sense here that the market would at least give a price correction back down, a 15-minute price correction back down. I don't think I would take that. Gamma, the way Gamma's been situated has helped to create these huge ranges, and the VIX is so high that we just keep overshooting in both directions. So I don't think I would come in and take this inside 5. And as a matter of fact, what I was telling people on the team was to probably stop trading around that time. It's not everybody on the team. 10:30 to 2 o'clock day, we don't want to do any trading. Market just got very tight, very sloppy. We wanted to wait for 2 o'clock, wait for the Fed. You're off the open trading was fine and normal, and there were some long setups that were available for the open. Some of them worked out okay, and then market just got super sloppy till 2 o'clock came around, and then we know the story there. So is that a trade setup? Yeah, it's a trade setup. You understand that this candle's breaking to the down, time of day here, deeper price correction, 15-minute chart makes sense. You can try to take advantage of that. For me personally, it's a little bit too microscopic, and I don't really want to do it in this market environment when we're having our first strong day. Tesla's kind of hovering around flat, right, from where it closed, if I'm reading this right. 933 is where we're trading. Just keep an eye on this Tesla because of its importance to the market as a whole here, which is actually green compared to yesterday. Yeah, Tesla trading right around where it was trading when the market closed today, which is really interesting. Holman says the party is over. Sell rips. This is a question. When your range is big, you're going down and not trending. I don't understand the second part of your question, but yeah, like I just said when I was going over Mike's question, we have time frame continuity to the downside. For the most part, the only thing that's still intact is the 200-day on the SMA for the S&P. Even though the market's trading below it, the slope is higher. But for the most part, we have time frame continuity to the downside. And the longer we stay down here, the more bearish it is. The market technicals are starting to look very bearish. The next 2 days, like Diego said, are going to be extremely important. So we'll see what happens over the course of the next 2. But right now, we're talking pure technicals. You got to be thinking sell your bounces. You got to be thinking lower. I just would also caution to not short into extremes. You want to be shorting bounces, like you just said. You want to be selling rips, like you just said. When the market is, if we get a huge gap down tomorrow or something like that, we'll be so extended to the downside that you can't come in and short. It's that same situation. So that's where we pay attention to our indicators, our technical indicators, our sentiment indicators, our degrees of extension to know how and when we can short. It was a great opportunity to short at highs today, and some of you guys were all over it. Diego called out that spot so perfectly. Felipe and Josh were calling out their short sells that they were doing at highs today. This is technically right here, if you're paying attention to your big picture charts, this is exactly where you want to be looking to the short side. I got in my own head a little bit because I thought that the Fed was going to bring us a little bit higher than it, and that was obviously very wrong. But based on the news and information we had at 2 o'clock, I kind of thought that we would grind up. So for me, at highs today, I was more focused on taking risk off. I was taking longs off and not actually doing short selling or hedging, which I communicated you definitely could have been doing at that time. So really glad that people were able to capture those shorts. Would I buy here as an investor? As an investor, perhaps, actually. And that's what we were talking about with Microsoft after hours yesterday. Someone asked me that question. Would you buy Microsoft as an investor when the thing was trading at 270 yesterday? And the answer was yes. But that's, if you're asking as an investor, that's different than as a trader. As a trader, no. As an investor, yeah. Because if I'm investing, I'm not investing on margin. I'm not investing on leverage. I'm just buying companies I believe in at better prices. As a trader, this is not an environment where you want to be buying high. You buy those deep sell-offs when the market's super oversold and you look for those retracements. I can support that because the biggest up moves in the history of the market occur in bear markets, which is worth remembering. So if you're coming in and you're shorting at this low from a couple of days ago, you can get your face ripped off. Even if we go down, even if the market goes to $400, if you shorted at 422 2 trading sessions ago as a trader, you're destroyed. Because you have to understand your degrees of extension. You have to understand sentiment. You have to understand when the market can give the bear market bounces that can be furious. Again, statistically, just to repeat myself, the biggest up days and the biggest up moves typically occur in bear type markets. So that's why our extension rules are so important right now. It's why it was a great opportunity to be able to get some longs 2 days ago, and it's also why it was a great opportunity to get some shorts today. From Bill here, last Apple earnings, you talked through what you were seeing on the level 2 and tape in real time, which was super informative to watch and hear. I don't know with YouTube if you can do that, but if it doesn't mess you up, you'd love to watch and hear again. I don't think, and I don't remember, if I was showing my level 2 in Apple, even in the VTF last time, it must have meant that I didn't have a position and I wasn't trading it. The difference this time around is I do have a position in Apple. I'm probably going to hold at least some of it into the report. So I won't be able to show that level 2. I can still communicate what I see, but I can't show that on the screen if it shows my tier sizing there. From Jerry, but otherwise I'm happy to help. Always happy to help. From Jerry, please share your thoughts on how to capture sell-offs like the past couple of weeks. Seems like the whole world is trying to pick bottoms rather than just being with the bigger picture trend. Yeah, so I think we kind of went over this in the answer of several other people's questions already. So I can just kind of repeat the highlights though. Yes, right now it's a bearish market. We have time frame continuity to the downside. You are better off erring to the side of the shorts. You're better off looking for your short sales. The issues that we have to keep in mind are our degrees of extension. You don't want to short an extended market in the same way that you don't want to buy an extended market. The rules apply the same, just in reverse. So the problem with this market on the way down is there hasn't been many great opportunities to short. This day right here, January 13th, was an excellent opportunity to short. And then at highs here on January 20th, which I remember doing the afternoon meeting and telling you guys, apologizing to you guys because I failed to recognize it at the time. Highs on January 20th were a great opportunity to short because at highs, You guys remember we had this gap up and initial strong bounce right into the 80 MA on the daily. Once you start getting to that equilibrium zone in a bear market, that's exactly where you can start thinking to short. Great second opportunity to short. Then you can't short on this day. We're too extended. You can't short on this day. We're too extended. As a matter of fact, if you did, you probably got your face ripped off. In my opinion, you can't short yesterday because we're too extended. And then today was the third opportunity to actually be able to get shorts in this downtrending market that we've had here in January near highs. And you have to be paying attention to it. And I'm glad that we have a strong team here because I wasn't on point to see it until Diego brought up where we were on the bigger picture. And I was like, oh, wow, he's right. And then, again, Felipe, Josh coming in, putting on their shorts. We're totally on point. Totally on point. If the market is up huge intraday and it's reaching those areas, it's a good opportunity if you're long to sell stock for profit. Scrolling through here, seeing some commentary, just looking for the next question. When there are two inside candles in a row, which one needs to be broken? It's the tighter one, the second one that you're looking at. From Homan, on the Apple chart, downside moves have big candles in the 5-minute chart. Is that not a big clue? So generally, ranges and volatility increase into bear markets. So that's something that's worth noting. These tails are not real. There were false prints that went off on the 2:45 p.m. candle and the 2:50 p.m. candle. So these candles are actually not as big as they show. But I mean, this was the technical breakdown that came in. The range accelerated when Powell spoke. I don't necessarily think that big candles are an indication of a change of trend. And if they are, actually, it's probably more on the bullish side of things. Because, again, ranges increase on the way down. So the idea of capitulation is when your ranges are going to be biggest, right? Which is also why that trading session 2 sessions ago was so important, because it was the biggest ranging day that we've had, like, ever. So as ranges and volume increase, that's usually more a sign of capitulation, which actually would be a bottoming signal more than like a topping signal most of the time. El Patron. You guys are funny, man. Yeah, Carl Icahn dipped out and bought futures when Trump won the election. I'm not sure what that has to do with anything now, though. Yeah, where's our Tesla update? Tesla's still kind of in that same area, still holding in. 933 or so, exactly where it was last time I looked. Really interesting. Really interesting to see that Tesla's holding flat. Like, numbers looked okay to me. Sure, Justin, I'll try to do that again tomorrow if I can. From Gabriel here, in order to get a more clear signal that a real bottom comes, the market should go sideways at lows where there's accumulation by big investors. There's different types of bottoms. What you're describing is like a base or a rounded bottom. Sellers can keep bringing it down and then start slowly grinding higher and then starts retracing back up. Or does a V bottom like March 2020 will be okay for a bottom again? So it's a good question. So he's asking about bottoms. And traditionally, basing and breaking higher is what you're describing here. And that is a process of accumulation where smart buyers are coming in and they're taking back stock from the weak-handed retail people typically. Historically, from my understanding, V-bottoms are much rarer, but recently, in the last 5 years or so, it seems like most of our major market corrections have actually ended in a V-bottom. March 2020 did, the 2018 move did, so that tends to be a little more rare, and it's also been marked by Fed pivots, though, has been the big difference, is that the market was straight coming down on those two situations, and in 2018, Donald Trump was talking about firing Jerome Powell because he was raising interest rates, just like he's doing now, and then the Fed kind of caved and pivoted and market V-bottomed, and then March 2020 was also a Fed pivot that caused that V-bottom. So we'll see. That's what's been happening more recently. Scrolling through here. Tesla meetings at 5:30. Okay, looks like I got through all of the questions, and it's 10 after 5. So hell of a day today, everybody. Just absolutely insane, and I hope everyone survived it. I hope that everyone profited. I know some of you guys had some fantastic call-outs. I know a lot of you guys caught that bottom really well, too. Some of you guys caught the top really well. And I know that even with that great communication, that today was not an easy trading session. So I'm sure it wasn't perfect from everybody across the board. I know it wasn't perfect for me, but that is what it is. I will see everybody tomorrow morning. Try to get some sleep. Try to get some sleep. I think I'm saying that for myself as much as I'm saying it for you guys.